Everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hot spots in the markets for today. Unlike yesterday, we've actually got some things really moving around this morning. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have some things moving around. What is today's? It's Tuesday, March 22nd. What do we got? Well, one, we've got oil finally rolled over a little bit. I mean, oil just kept on climbing yesterday. We're going to take a quick peek at that. We know that that's coming off of concerns out of the EU mulling over banning Russian oil. We'll see how that also ultimately manifests itself, but clearly we have a supply challenge. We've got the pound absolutely taking off, exploding, blowing through some highs. You take a look at the pound yen. We're just going to take a peek over there, but there's some yen weakness coupled with some pound strength, and the pound yen has absolutely exploded. And then, of course, the big news yesterday, we had Fed Chairman Powell finally open his mouth. So, and he's prepared to, according to the statements, the comments he was making yesterday, they're prepared to start making half-point increment moves to combat inflation. Yesterday, we saw the stock market initially sell off after that, but as people have digested that information, they actually like the fact that the Fed is going to do what's needed, and stocks are showing that the resiliency, and stocks have since come back and taken back all of those losses. What has not retraced, though, is gold. Definitely got clipped on that news. So before we jump over to take a look at gold, oil, the equities markets, I mean, there's a lot of things moving around this morning. I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Oh, and by the way, we are going to be back in 3 hours. So if you haven't registered for today's full-blown session, while we're going to be covering stuff right now, Brian will be back in 3 hours and do an entire market analysis, as well as looking forward to what's coming up the rest of the week. So be sure I just dropped that link in. I think I dropped it in both places, into Facebook and into YouTube. But if you haven't registered, please register for that. Brian, I'm going to flip it over to you, and let's just do a quick rundown before that session in 3 hours of what we've got now going into the open.
Yeah, Powell had a bunch of different comments yesterday that were, I would say, this has kind of been his MO for the last couple of months, where he does something really, really weak and then makes a strong statement after the fact, trying to justify it. A couple of the headline ones that he mentioned, and again, there was an immediate market response from it, was Fed will hike more than 25 basis points each time if needed. Now, it's the if needed part, which has been interesting, because he didn't, again, at 40-year highs, he didn't feel that it was needed the first time, and nobody but Bullard did. In his speech, and it's a pretty interesting speech, one of the things that he mentions in here, which again actually makes the United States unique in this, is the fact that he talks about how we have a dual mandate, and he actually mentioned it kind of right off the bat. Now they're saying, and again, remember, the last excuse was we couldn't do it because of labor. Now he's saying the labor market is very strong and inflation is much too high. It's like, yes, that's been the case, but mentioning the dual mandate to promote maximum employment and stable prices, it's very interesting. And it's funny, my colleagues and I are actually acutely aware that high inflation imposes significant hardship, especially those for those least able to meet the higher costs of essentials like food, housing, and transportation. When I look at this, I believe that he got a talking to, and he had to sit in the timeout corner, is going to be my assessment on there, because these were not things that he mentioned before. He mentioned the last thing that they were talking about was the labor market is weak, we can't do it, the Ukraine, and now all of a sudden, now he's worried about people that are not able to afford the higher prices. So this is where there's questions about whether the Fed has been compromised or not, and it's too political. At the end of the day, it goes back to what Bullard has been saying the entire time, but they said that they are prepared to do it if it's needed, which doesn't mean they're actually going to do it. And I think that the most interesting. The Fed faces, it's an obvious need to move expeditiously in rising rates from neutral level, right? Powell says inflation is much too high, and the Fed will take necessary steps. Well, If it's much too high, how did you let it get there? This is kind of the letting it happen and then trying to, deal with it after the fact versus trying to stop it. And this is where the Fed's really been failing at this point. Um, if you let it get to 40-year highs, that's a problem. We were already told by Yellen, as well as Powell, as well as other people, that price rises are going to probably continue throughout this year. So God knows how long, how high it's going to get. But now that he's mentioning people that are unable to afford things and how detrimental it is, I believe he got a. I don't want to say he got a spanking, but he got a talking to. So, you know, the markets have looked at that and also dissected that statement at this point. You're able to see, at least in the dollar, you can see when he made that statement, he made the statement right here. And you can see that, again, this is the dollar index. We went from 98.21 all the way up to 99. And then it continued to rise. And then the European market opened. And the literal peak at this one is right at 3 o'clock a.m. Eastern, right when the European traders come on. And what have they done? They've shot it back, and God, it's probably over 50 at this point. Yeah,
Yeah.
we can see how far we've retraced. We've retraced 61% of the way all the way back down again. So the statement is, it looks great when you say it, but the reality is they haven't done anything. They
Let's
haven't
see it.
shown their
Yeah.
action is the exact opposite of it. So, talk is talk, action is action. So the market is kind of evaporated. So, overall, do I think it's great that they're saying this? Yes. Does it show in my eyes, their inadequacy of what they've done thus far? Absolutely 100%. Again, Jamie Dimon was 100% correct in what he said last fall. Bullard is also dead on everything he said, and he was the one dissenting person that said it needs to be 50. And now magically it's like, it's way too high. We got to do 50.
Yeah.
So
Well,
this is why I said I truly believe that he will be the next one to take over. And, again, just bringing this up again against the political nature of it, we have not seen a single thing come out of Bernard, and she is supposed to be, the vice chair being groomed to take over. We have heard zero. So, again, very, very interesting. The other thing we saw too was news out of Japan. Now, Japan is important. It is a counter currency. Japan relies on weakness. Okay, the reason why is because they are an export-based nation. They're very small, but everything they do is based off of their exports. If they have we've seen the Japanese central bank intervene. We'll talk about currency interventions. What they do is they're trying to purposely keep the yen weak, so it helps their economy. If the yen gets too expensive, people don't buy stuff from them. Their economy just folds. That's just not how their economy is designed. And it kind of makes you think, hey, is this the playbook that Russia is trying to use now by devaluing their currency a lot? It means that goods will be very, very cheap to buy from Russia. It's nice to say that we're going to do the right thing and not buy things, but when the price is that much cheaper, it's hard not to go that direction.
although I don't know what they've got other than energy.
They got tons of natural resources. So in an environment where we're going to run out of natural resources, they got a ton of them. Particularly things like uranium for nuclear power plants, rare earth metals used for high price electronics, all solar technology, a lot of the silicate and things like that, all comes from Russia. So, but basically, Japan saying that, hey, listen, we're not going to really do much. We know there'll be a little bit of inflation, but they don't want to raise interest rates because, again, that makes their currency stronger. So this is extremely weak news coming out of them, where everybody else is talking about raising. Japan is doing the exact opposite. We know there'll be some price inflation, but we're not going to do it. We're going to continue our easing policy. We're going to buy back ETFs to kind of support things. They're maintaining, and again, everybody has that hawkish tone. No, they are straight up dovish. We're not raising anything. We're going to keep QE in, but that's how their economy survives. Because of it, we have things like this. And again, pound data came out as well. Pound data, not an actual release, but some of the statements. Again, because they're approaching that 1%, which is an absolutely huge number, they can do some different things when it hits 1%. We've seen massive movements in the pound, especially the pound yen. We're seeing pound strength even versus the dollar, but anything that has the yen in it, yen is in that extreme weakness mode. So dollar yen, up huge, right? Aussie yen, also, let's see, where is it? Aussie yen, also up huge. Euro yen, also up huge. Pound yen, up huge. Dollar yen, up huge. Okay? Now, they are running into some 4-hour levels, so it is at an interesting spot for reversals. But even so, looking at the euro pound, you can see that the euro pound is continuing the drop. We talked about a level breaking through the 86 yesterday. And we talk about what the Harry Potter looks like, a drop, a base, and a pullback. There's your drop, there's your base, there's your pullback, and there's your entry. And it continued push down. So technical-wise, it was already matching up to what we were talking about yesterday. And what's interesting about this is a lot of people say, well, is this because of Powell? Like, is that why the yen is doing what it's doing? No, because gold is doing nothing. Gold came up, it tagged at 1940, and then Powell spoke, and it literally shot it right back down about $20, $30, and it's been holding lower. So we're not seeing it go there. And the indices overall, I mean, the VIX is really not doing much. The dollar has really retraced back again, done nothing. It's made it very interesting in the indices. We saw an immediate kind of push, right? We saw that immediate collapse, and then it retraced, and we're really kind of exactly at the same point when Powell spoke yesterday. So the market's looking at this and said, well, wait a second. Let me bring it down to 15. It's a little easier. Powell says they're going to raise it by 0.5. Wait a second. Powell said that in the past. He's done nothing. Okay, and he went right back up. So a lot of it comes back to action. Like I said, right after the report came out, we had Waller saying the data is screaming for us to raise more, but you didn't vote for raising more. And now Powell's saying, hey, we'll do more, but they didn't do more. The only one that did it was Bullard. So the market's looking at this and saying, really, you're going to do more, but are you actually going to do more? And right now it looks like the market doesn't actually believe them. So remember, at one point, the 0.5% raise was actually what was factored in with like an 80% certainty, and they pulled back from that, and that's when the markets were like, yep, go, 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 go. And now we're kind of back up to these high areas. So it's a very interesting play today. And the reason why I'm not really doing many setups in currencies is because really, I mean, I guess the biggest one we can look at is, this movement, a lot of it occurred really starting from 3 o'clock, which is right here. Okay. Let me go back down to 30 minutes. It's right here. Okay. Again, we saw the yen weakness, and that's where we got all this area. We bounced off the original area. We had another one here, and it kind of hit it and started the base through it. And it's like, wait a second, we're going to break and pull back. Oh, it's going to go long. And that's when the Japanese data came out, as well as the people were like, wait, pounds reach. Japan's going to stay weak. That means the carry trade is in. Oh, wait a second. Next time they're going to be at 1%. Bam, carry trade, and it just took off. So now you can see that it's actually a red candle now. This level up top, this is actually a 4-hour. This is a 4-hour supply zone. So I always talk about when we do these sessions in the morning, we always are looking at small levels because it's meant for an intraday basis type trading. But you always have to know where the 4-hour levels are because those are where the big swings turn. That tends to be where you see those, and this just happens to be one of those where you're seeing, we ran into a 4-hour zone in the pound yen starting to retrace back a bit. Do we have a full retracement? Probably not, because this is really a fundamental change in the way that business is being done with the carry trade coming back on. And remember, the carry trade, it's something that you and I can do, not at Nadex, but you can do it. It's something that banks are all over. Big business, institutions absolutely are all over it. So it's kind of a new thing that they haven't been able to do for years. But, pound yen looking for a bit of a reversal. Dollar yen also, and again, it ended up hitting and riding along that first level, and now has also kind of put something in. There may actually be a short opportunity here in this one today. The euro yen also came right up. It ended up hitting this level, and you can see it based in there, but the news coming out of Japan and things like that was just too much to not take advantage of it. It broke through, hit the next one, and now is already starting to pull back, and this one's actually probably already close. And this is a level we had on here yesterday as a potential reversal. This one may be out already. It just barely missed it, so it's super close. And then also yen is kind of the same thing. Also yen, I don't have one drawn up here, but 90 I know is a psychological level, and we got within 10 pips of it. So they're all kind of in reversals. Now, what it does mean is we have the indices all sitting there. VIX is down 1.5%. Indices are all in the green. Bonds are getting hammered. Okay, you may say, what does this matter? Again, rising interest rates, being more willing to raise interest rates, not good for the bond story. So bonds are going down, which also means risk back on again. Because again, remember, bonds are a risk story. Another huge mover is the cryptocurrencies. This is the explosion. This actually came also from the yen. We saw this kind of late yesterday. The reason I bring it up is because it is a 4.7% move. It's up $1,900 in the last, really since the close of the market yesterday. That's a huge move. I mean, percentage-wise, Ethereum's about the same, up $100. But having an asset that moves $1,900, that's a lot in a very short period of time. Now, could it literally turn right now and flip and go back down? Yeah, it could. It could go down $1,900 tomorrow. So these are the days where all the crypto experts are like, yeah, look, I told you. But it literally could do the same exact thing, just like we had here, where it goes up and down. So it looks like it's going to be more of a risk-on day today. Oil pulled back. We talked about it, potentially getting a trade there right around that 50% retracement level. It ended up coming and closing a little bit higher and then gap lower and came up and grabbed that gap. And it did push lower. It's not really breaking, but the 111.50 seems to be an area where, hey, listen, there's definitely something going on there. we're kind of pushing up there right now, so we'll see if that continues to push lower. I didn't see any headlines. I was looking to see if there was any additional headlines. Yeah, here you go. Bullard just came out. The Fed should take aggressive action to combat inflation. The Fed needs to get policy to neutral. Faster is better. I think
Yep.
50 basis point moves would definitely be in the. And again, he's the one that voted for it.
Well, he was
Um,
calling for 3%, right? So it's like, to get
yeah.
there, the only way we could possibly said this
And here you go.
over a
The
week ago.
current
It
Fed
had to be.
policy.
The math doesn't work, right?
And here you go. This is his statement. Current Fed policy is fueling inflation. It
Yep.
can't be any more clear than that. There's the shot across the bow right now that what is happening is wrong. So, yeah, it's taking too long to run off it. Far too long. So again, shots fired from him, but he's been the aggressive one, and it's funny that everybody else is speaking his language now. So, you know, I love this. The Fed is targeting a soft landing. Getting it wrong means recession. So, there's a lot out there, but we really haven't heard much else. No, there's really not a lot. Oh, here you go. Ukraine is now it's ready to discuss a commitment not to join NATO. That came out early this morning as well. But besides that, there's actually not really even a lot of Ukraine headlines out there right now.
No,
It's
it's everything
quiet.
else. Yeah,
Yeah, it's everything else. And we haven't heard, and I mentioned it yesterday, we actually haven't heard any more out of the Yemen situation with the kind of the missiles and the drone strikes.
Yep.
That's also a good thing for getting oil down a little bit, because it's like, wait, is it that bad? Is it not that bad? And then again, Russia made some sovereign debt payments as well, that were processed. So yeah, interesting day. Like I said, we have the big movers, but you can't be chasing these going, hey, listen, the pound yen's up 272. I should buy this,
Yeah.
right? No, it was up 320 30 minutes ago. So it's already starting to pull back. I think it'll be very interesting in the open today to really digest some of these comments. Again, Bullard is going to be considered the hawk at this point. Everybody else is now saying kind of the things in line with what he's been saying already.
I think the markets are resilient. I mean, I think they're resilient enough to be able to absorb it. I mean, still 0% interest in if we went to 1%, it's still historically speaking nothing. So I mean, you got to put it in context. As we've been down at free money for so long, it can't stay free forever. And
no, well, I think it'll stay low. I don't think it'll ever go back to 5 or 6 or anything like that. But I do think at this point they are seeing, and
5
again,
or 6.
The fact, yeah, no, it'll never go
I
back.
laugh because my first mortgage was up at 10 or 11%.
Yeah, I mean,
come on.
In reality, the way that I would look at this, I would say, hey, listen, right now, this is what the Europeans have done. Okay, this black arrow, that's what the Europeans have done. We were really kind of in the overnight stabilized. We had pulled back from kind of that push back again. Europeans drove it straight higher. I would actually be looking for shorting opportunities. People will start diving into this some more. The fact that his language has changed and actually acknowledge the fact that, again, Bullard's saying the Fed is causing it, there's going to have to be a response back on that one. The fact that he is now saying that this is very, very hard for people that can't afford it, they're going to jump on that headline today. People are going to be talking about that one. And I'll tell you right now, politicians are going to start really making that, because, like, wait a second. People can't, that's bad. They're going to be unhappy. Because remember, they know
going
that
on for a while, though.
Yeah, well, it has, but they haven't acknowledged. It's kind of like if we don't mention it, it's not really here, right? Transitory inflation. It's not. If we don't mention it, it's not here. It took them a year and a half to acknowledge it. Then the tight labor market. All the labor looked good, but they're like, nah, tight labor market. Nah, it's not here. Now they're saying it's extremely good. It's like, really? Because it's looked great the last couple of months, and you guys have used that. Now they've suddenly changed tone. So I would say is that we further digest this. Other people are going to talk. If you look at what news we have today, ECB president just talked. We have the Swiss talking, and then we have Messer speaking. Remember, Messer kind of comes in a little bit late, but again, talking about monetary policy later on this evening, right at 5 o'clock, could be interesting. We could get more people saying, hey, listen, because you don't want to be the one guy that is constantly holding it back. And then you have somebody saying, well, hey, listen, you kept voting no, and listen, we can't afford things because the price is so high. So
it's good.
It's political, so
it's coming. It's coming. Yeah. We know what's coming. We knew it had to be. So
yeah, but the market, remember, the Wall Street will play it on a day-to-day basis until it's actually here. With the Europeans driving it higher, I'd actually be looking for opportunities to short today. Drop it to a 15. See what the action looks like between 9:15 and 9:30. Again, we're already kind of seeing. It's not at its highs. We're seeing it kind of pull back, and again, we know we have some levels sitting right above, at least
right above it. Yep.
Yeah, I mean, again, this level from yesterday, was perfect at 9:30. It literally hit it, and you can see where
And
it went. So,
remember, if you haven't registered, we're going to be back here in 3 hours. So you're going to see the open. You're going to see how people want to digest this on, the retail trader. But then we'll get an opportunity to dive through all of this in just a few hours.
yep.
So,
So,
um, yeah, and then kind of look at what to be looking for the rest of the week.
mhm.
Yeah, it started off as a very quiet week. Yesterday, there was nothing, and now we got things moving all over the place. So with that, any questions for Nadex, please email us customerservice@nadex.com. Brian is also accessible. Please feel free to email Brian. support@keeptradingsimple.com. My email's up there as well, todd.rich@nadex.com. We've The link is up there. If you haven't registered, please register. Join us back in 3 hours. It'll be after the open, so Brian will have an opportunity to see how the retail traders are starting to react to some of this news from yesterday. From yesterday afternoon with Powell opening his mouth, looking at half point increments. So we are going to see some action today. And then clearly with the pound strength, the yen weakness, I mean, FX markets are starting to get hot again. So it'll be good. So thank you for joining us. Come back in a few hours. If you're not able to join then, we will be back tomorrow morning. And until then, good luck in the markets, everyone.